Do you want to maximize your success with NCUA? Join Mark Treichel as he shares with you the insider's view on passing your exam with flying colors. The With Flying Colors podcast is sponsored by Credit Union Exam Solutions by Mark Treichel. If you would like to work directly with the Credit Union Exam Solutions team and receive support to optimize your results with NCUA so you save time and money, visit us at marktreichel.com to find out more.
Hey everyone, this is Mark Treichel with another episode of With Flying Colors, and today I'm back with frequent guests and my team members at Credit Union Exam Solutions, Steve Farrar and Todd Miller. Guys, how you doing this afternoon?
It's hot here in Montana, just like the rest of the U.S.
Yeah, we're
muggy. Yeah, hot and muggy here in Virginia, where I'm at today. Yeah.
And if you believe in global warming, you say, gosh, it's hotter than normal. And if you don't believe in global warming, you say, hey, it's just July. So I'm not going to pick which side of the camp I'm in, but those are the two camps. But yeah, it's hot. It's hot indeed. All right. And so intros for those folks who are not frequent listeners, who might be new to the show. Let's have an introduction. Let's go. Todd Miller first today.
I spent just a little bit over 34 years with NCUA. I retired in July of 2021. I can break my time in NCUA down into three parts. I spent basically a third of it as an examiner and a problem case officer, a third of it as a regional capital market specialist, and a third of it as a director of special auctions supervising problem case officers and regional capital market specialists. So between those items, a good part of my career was spent with what NCUA would call troubled credit unions, or large and complex credit unions.
Very good. And Steve?
Yeah, I was 30 plus years at NCUA and break my career into two parts. The first 15 years were out in the field, predominantly as a problem case officer and mainly West Coast based, that working with those troubled institutions. Then I went into the central office, into the division of risk management, where I got to work on just a variety of projects over the years. The enforcement manual, the corporate resolution was a big one, the risk-based capital, and then I did spend some time at the end as the vice president of the central liquidity facility.
Yeah, we all spent a lot of time dealing with troubled credit unions, whether it was director of special actions, problem case officer, corporate resolution, writing the enforcement manual, and it was a lot of fun doing that. We talk about that a lot here, and that's a good fit for the conversation of our topic today. And this podcast will be called something like, so you're a CAMEL code 3. Now what? And as we dive into this, Steve, I thought maybe you could give us some stats on recent trends in CAMEL code 3s, which of course which I've talked about here a lot, come from NCUA's share insurance briefing. But what can you share with us on what's going on in CAMEL's codes most recently?
Yeah, the trend it's a short-term trend. I just looked at year-end 23 and then the first quarter. And then the actual CAMEL 3's number, it went from 776 at the end of the year to 760 reported as of March. The assets went up from 160 billion to 177 billion. And I said that would probably be one of the numbers that seemed pretty obvious, and that we're seeing more bigger credit unions ended up with the CAMEL 3s.
Yeah, that's very true. The quarter by quarter, I've looked at this pretty much ever since leaving NCUA. That briefing and two slides on the briefing, one of the ones you're reading from is one of my favorite ones to look at because it really reveals where things are going. And it's like the 10th quarter in a row when CAMEL 3s have gone up. And the point you made is spot on, that smaller credit unions, CAMEL codes, there's not much change. It's the bigger codes going from 1s and 2s to 3s. And more recently, maybe this upcoming quarters, we'll see 3s going to 4s, because CAMEL codes tend to move one grade at a time, although not always. But it's those large credit unions that are driving the numbers right now. And you can see it in the stats, and we've seen it in our conversations. When you're code 1, life is good. NCUA may come see you once a year. They may not, depending on your size. When you're a code 2, same kind of thing. But when you're a code 3, life tends to change a little bit. Let's talk a little bit about how things change at NCU from NCUA's perspective on CAMEL Code 3s and how that might change for a credit union that's downgraded to a 3.
I think you start out with, what does the Code 3 mean to NCUA? And without reading their whole definition from the CAMEL letter, there's a couple sentences in there that really inform NCUA's supervision process. For Code 3 composite, they say credit unions in this group exhibit some degree of supervisory concern in one or more components. But then at the end of the definition, this is what really drives NCUA supervision process with Code 3s. It says risk management practices may be less than satisfactory relative to the credit union size and complexity. And so when you get those things, it raises a supervisory concern from NCUA's level. It heightens their supervision. They're trying to assess. They don't think it's going to fail at this point, but they're trying to assess, are you willing and able to fix these issues? And what they're trying to do is prevent an issue that is starting to go south from actually going south and crossing the border into an unacceptable level. Once you're at CAMEL 3, NCUA supervision goes up quite a bit. And actually, NCUA, they publish their National Supervision Policy Annual, and their practices with respect to CAMEL 3 and CAMEL 4 credit unions are actually not redacted in this case. There's lots of pieces of that supervision manual that might be helpful to credit unions that seem to be increasingly redacted. But none of their supervision processes, credit unions, are redacted, so credit unions can read down if they so choose. But at a Code 3 level in general, credit unions, you can expect an exam, a follow-up exam once a year. So you're going to get 2 visits a year from your examiners. That second one is generally going to focus on the doors. There's some exceptions to that, which we can talk about in a little bit. But the biggest thing is your time and effort in dealing with your examiners is going to increase. So they're going to give you things to do, and then they're going to be in your hair every 6 months, making sure you're actually doing that.
Very good. Steve, anything you want to add to those comments?
No, that's just fine. That's what the manual says. So that's what you can certainly expect them to try to achieve.
Try to achieve. Yes, I've alluded here. Sometimes they may say they're going to come back that frequently, but their own reports show that the Code 3's contacts, they tend to get done about 67% of the time. And those start dates, it used to be when you and I were doing exams, guys, long ago, it used to be end date to end date. They've given themselves a little bit of flexibility, and correct me if I'm wrong. It's from end date to start date. So they just have to start the exam within 6 months. Do I have that right?
You have that correct.
Okay. And the other thing I'll add from the definitions, the one sentence that always sticks in my mind that sometimes rarely NCUA raises, but when CEOs read it, they get frustrated. The Code 3 definition of management includes a sentence that says management and board may be unwilling or unable to correct the problems that are present. And sometimes when a CEO sees that sentence, their hair will stand up on the back of their neck, and NCUA tends to downplay that side of it. But those are pretty chilling words for a Code 3 the first time they see it. And as you say, they show up twice as frequently to assess their own risk. But that has a drag because it takes a lot of your time preparing, et cetera, et cetera. So what else? You're a Code 3. What else can we share?
One of the things that are going to go with this is you'll get a document of resolution as a Code 3. And documents of resolution have completion dates. And generally, and this is generally going to be true, they're going to set those completion dates to tie in with that next exam. So you can expect to have completion dates, and they're going to expect you to resolve problems within that 180-day period, because they're going to want to come back. They're going to want to assess, have you corrected issues? Are you making significant progress? So if you get a document of resolution, while examiners are supposed to be flexible in negotiating terms for those document of resolutions and corrective actions and due dates, you might find your examiner a little bit inflexible about those due dates, because they're going to want to put due dates that coincide with that next visit 180 days from now.
And that can be logical from the perspective of them wanting to be able to measure, because in their systems, under the new merit system, if you have 3 document resolutions, NCUA has to say it's finished or it's not, log it off. They can write that it's substantially finished or finished, but in their systems, they now have the ability to track it, which may be why we're seeing them so much focus on that timeline. And thinking of the conversations we had where credit union was getting asked to stand up an enterprise risk management solution program from start to finish. The examiners in the meeting said, it'll take you 2 years to do this, but the time they gave them to it was linked to that next follow-up, which doesn't seem logical, but the method to that madness is because they know they're coming in and they want to show that there's progress or not.
Yeah. There is one exception to that 180 days. And if you're a credit union that has significant record-keeping errors or significant BSA violations, you will see them in 90 days. And that doesn't matter what your CAMEL code is, whether it's a 2 or a 3. You're not going to be a code 1 with significant record-keeping errors. Probably not a code 2, but maybe. But for those 2 specific areas, significant BSA violations and significant record-keeping problems, you can see an examiner every 90 days just for that record-keeping issue.
And the BSA
NCUA has a pretty low tolerance for record-keeping problems.
And the BSA is because of the link to the importance of that program, terrorist activity, money laundering, and they have an agreement with FinCEN saying that they will treat things in a particular way, either in a document resolution or a letter of understanding. And of course, the record-keeping problem, because they don't know if there's a risk to the fund if you don't know what your balance sheet is, right? It's really that simple.
And I'm sure Todd and I shared this, that we had no sympathy for when we came into a place and discovered record-keeping problems. It was like, you got record-keeping problems, you're going to pay to get them fixed as quickly as possible. And that was one that I just didn't negotiate on that one. We got to find out what the numbers are, and I think that's really important.
Yeah, zero tolerance on record keeping for sure. And we've seen some instances of that in my conversations with NCUA folks, that they've seen that. And when they do their briefings of CAMEL codes, the board will often ask, what is it that's triggering that? And operational and accounting issues has come up on a couple of instances. You got to get the basics down before you focus on anything else. And accounting is the basic. They will beat you up on that for sure.
You're managing your members' money. You should know where it's all at. It's a fiduciary type thing. The other thing is when you have record-keeping problems, it just opens the door to fraud and all kinds of other things. Just even clerical mistakes with ACHs and feds and returns. If you can't do record keeping, you can miss deadlines and cause losses just because of that. And just one other thing with the record keeping and the BSA violations, NCUA actually has separate tracking systems just for those 2 issues. And supervisors get reports on that every single month. Here's our outstanding record keeping and BSA problem children.
Oh, makes sense. Makes sense. So if you're a code 3, in addition to the examination, as you mentioned, you'll get a document resolution. The likelihood of also getting what's called an RDL or a regional director letter is at or near 100%, I would say. Any thoughts on the concept of regional director letters? And because sometimes our clients will get that and they'll be surprised that they got a letter. They had a good exit meeting. They said they're going to do everything. And then lo and behold, they get a letter saying, hey, you better take this seriously from the regional director. Any thoughts on regional director letters as it relates to code 3s?
At the time of my retirement, the time I retired, that was a standard practice in the Western region. That regional director, you got a new code 3, she was going to send you a letter. I think part of that is there's an expectation on the board when you get problems related to a code 3 that the board is going to get involved and actively hold management accountable for resolving issues. And the board is expected to exercise appropriate oversight. And that regional director letter is a way for the regional director to tell the board, hey, you need to pay attention. You need to take this seriously. It's to support and emphasize the examiner's rating of a 3, that there are supervisory concerns here. There are weaknesses in your risk management systems. and you need to get them corrected.
There really shouldn't be anything surprising in that letter because it's going to paraphrase what was in the exam. It's going to be drafted by the examiner who wrote the exam because they're going to have to follow the policy to issue it. It just kind of naturally follows.
And the other piece that follows with this is, depending on your asset sizes of the Code 3, you're probably going to fall under this whole monthly reporting to your examiner too. You're going to be sending them financial statements, board minutes, board packages every month in most cases. If you're over $250 million, it's absolutely required. It's optional in other cases, but almost every examiner, supervisor, they're going to make their examiners pay attention to what's going on in all of their Code 3s. So while policy requires it over 250 million, any Code 3 can pretty much expect that. There's going to be monthly reporting to your district examiner.
And we've seen that either placed in a document resolution or just asked for in an email. But the right place for that would be in the report to make sure that the board's aware that needs to happen, correct?
Since they went to merit, we seem to be seeing it in the report almost all the time, either in the overview or in the document or resolution section or in that RDL letter. It was always optional for examiners how they communicated that request to the crediting, whether they just pick up the phone and say, from this point, start doing it, or they will just tell management that on site. But since they went to merit, it seems to be showing up in the report formally in most cases on our Code 3s.
Got it. And federal charter versus state charter. Any thoughts on how that might influence being a Code 3 if you're a state charter insured by NCUA?
For credit unions over 250 million, it doesn't change at all. Whether you're a FISCU or a federal, NCUA is still going to be involved in those follow-ups. There is some flexibility given for those credit unions under 250 million out of state charter. They can push that 180 days out to a little bit longer period with ARD approval. Their policy allows for a waiver of those contacts in a state charter, even in federal, but that requires some paperwork, some ARD approvals, some regional director approvals. They have to say this credit union does not represent any risk to the share insurance fund. And I don't see many RDs actually signing that very often unless they have a great deal of confidence in that state regulator.
And the same works for, we'll get into that when we talk about Code 4s in the next podcast, but there are other waivers that can happen that while theoretically they may be allowed, they're probably not happening that frequently. In a perfect world, a credit union is going to stay a Code 1 or a Code 2. If they slip into a Code 3, NCUA is coming back in 6 months. And I know the answer to this question, but I'm going to pose the question. So you downgrade me to a Code 3, March of 2024. You're telling me you're going to come back in September, start the exam by the end of September 2024. I have 3 document resolutions. The dates all come and go by that point in time. NCUA comes back September 30th, has an exam 2 or 3 weeks in a follow-up exam, 2 weeks in September. You get the report by the end of the year, maybe, hopefully, and you have a conversation with your examiners. Here's the question. So that's the context. Here's the question. When you come back for the follow-up exam, will you upgrade me?
Possibly, but probably not.
Possibly, but probably not. So it's not it's like there's a waiver for that. It can be done. There's nothing that says NCUA cannot do it, but it's not really the norm. True statement?
It really depends on resources that examiner has to conduct the follow-up. Or is it 2 people and they're just looking at the door? Or do they get 2 or 3 other people and they look at the door and look at all the findings and maybe look at your business plan? If they have time and resources to make that follow-up, expand that scope beyond just the follow-up on the door, then there's a chance of that upgrade. Let's say they do like a mini exam, 80% of it, or 70%. There's some number in there where if they have time and resources to look at things in depth, there's a chance that they will upgrade you if you're deserving of it. In most cases, though, they don't have those resources. They're focused just on that document of resolution, maybe some of the findings, and they're basically just going to say, hey, we need to review these other areas at a full scope exam before we can upgrade you, is they're going to be their response most of the time. And what we're seeing with time report, or the time it takes for NCUA to issue reports today, I think in most cases in the current era, they don't have the resources on a follow-up to expand it to the point where they can look at enough stuff to upgrade you, even if you're deserving of it. So that's why I said probably not in the current environment.
But I just did a little bit of math on that. So you come in, you get downgraded to a 3 in March. They say they're going to come back and start it in 6 months. In a perfect world, maybe they'd be done with that contact. They get you the report in 2 months. So you got six months, another 2 months. So we're talking 14 months. At that 14-month point, you're told you're not getting upgraded, meaning they have to come back in another 6 months. So really, when you get downgraded to a 3, it means you're going to see him 3 times in 20 months.
Yeah, probably.
Probably.
You're the one, Mark, who reads NCUA's business plans in detail. We used to have this whole thing, you want to see code 3s and 4s resolved in 24 months. Is that still part of their annual business plans and goals? I didn't read last year's that close. So it used to be there, though.
Yeah, I think it is there. And in code 4s was 12 or
24 months, I think.
24. Okay. When we talk about code 4s, I got a funny story for you on code 4 resolution from back in the day. But yeah, I believe that's still out there. So their goal would be at that 3rd one, right, to have it upgraded perfect in all reality. And if things have gotten worse, that's when you start finding out that you maybe went from a 3 to a 4 instead of the goal of going back to a 2. All right, guys, any last thoughts on CAMEL code 3s?
I think that points out the importance that door that is kind of new because you became a code 3 is addressing that core problem. Is that is the goal, is if you're new to a 3 and haven't been before, there should be an issue you all know is coming, and that door will fix what it is. Because sometimes you do it, but you don't get the results that were expected, and that it doesn't really fix the problem. But that is the goal, is to correct those problems really quickly, but so it doesn't escalate.
Yeah, and you do what's needed in that door, you get the results. Might lead to another. It could lead to another door, but that doesn't necessarily mean that door means you're going to be, because a code 2 can have a door, a code 1 can have a door, but it doesn't mean that it's 100% done.
The other thing for directors that are listening, and maybe even for CEOs that are listening too, as directors, if you get a code 3 in a door, you should have some type of tracking reporting system in place that your management team is making progress on resolving these doors. If you're a CEO, chief operating officer type individual responsible for correcting of that door, you should be developing reports to let your board know that you are making progress on it. So it goes both ways. You should be demonstrating that we're resolving this door. For our boards and as board members, you should be holding your management accountable for progress reports on those doors and holding your management accountable for addressing them.
And even if NCUA doesn't ask for it formally, we've seen it asked for formally. We've seen them asked it when you send it to the board, put it in your board packet, et cetera. But that's a great point. They establish the expectations, but then verify, right? Very good, guys. All right. I appreciate you sharing your wisdom as it relates to CAMEL code 3s. And next week, we'll have a follow-up to this, which you might guess is, now that you're a code 4, what does that mean? So thanks, guys. Appreciate your time, as always.
Have a great day.
You too. Listeners, I want to thank you for listening. As always, hope you'll listen again soon. This is Mark Treichel, signing off with Flying Colors.
Thank you for joining us on this episode of With Flying Colors. Subscribe on your favorite podcast app to hear future episodes where subject matter experts of all varieties will provide tips on how to achieve success with NCUA. If you would like to learn more about how we assist credit unions, check out our services at marktreichel.com.